here we go. We got that volatility gap on that opening bell. It's here. It's now right into that 12.5 area. We've got that NDX coming up to that 2372.98. That's that morning gap. This is how it looks in the first minute. NASDAQ back up to the 2700 level, and you're right there below the 1292 level that we talked about on the S&P volatility gap. We've got a high at $14 on the markup in the 620 call. We hit 1060, and now we're dropping because obviously you got to sell into strength and buy weakness on call contracts. It's 631 reversal, $2 reversal MMTs as I'm doing this live opening video. So you would be selling into strength and buying back again. I do like the 620 call. That's this one here. It made a high. It's going to go higher. It's 1280. That's the low end of your gap. You got a 960 over here plus 290. The 625 isn't that much in the money. Of course, we're gonna look at new entries, and we are. We're gonna look at new entries, and here is the major volatility opening bell, European gap in 2 minutes of the print, and here are the highs being set in the first 3 minutes of the opening bell. And what we're looking for is a number of highs from the gap. And there's only 24, 23, and Google is equally weighted. Google is equally weighted between the lows and the highs of the first 2 minute opening bell. And it's coming back nice and strongly off of the lows as it should. And we're going to look and watch how we can come back and break up and break through the intraday morning high of the 3 minute opening bell. And where is the equity going to break and make? Which one is going to have higher highs and higher lows? We'll continue to keep our limit orders out to sell. We have a 1250 low. We do have a markup on that call. And the close was 910. So you had 9, you had 10, 11, 12, 13, 14, 15, or 14. So your 1330, you're going to break that high. The limit order out, if we can break up toward the high, is 1650 on this. We gave it out in pre-market exit. This one here, on the other hand, was around $11.20, and they're printing on their highs as Google continues to make higher highs. And therefore, we'll stay in those positions. We're going to look, though, that your high here has got a $2 ratio reversal gap every day on Apple in its volatility. Google must continue to make the highs for the individuals that own the 625 to be executed at 1120. That would be on a morning intraday high exit. Okay? And if it's going stronger, that's going to be there. 1130s went off. All right, well, okay. Here it is. 47 highs. We were 23, 24 milliseconds ago, and that's why Karine canceled the 1650 sell based on those number of highs, based on the number of lows, and put that out at 1720. $2 up above the high here. All right, and we're going to let and see how many intraday highs. They had 444 intraday lows yesterday, and we're going to try to build this last contract to the upside. And it peaked, and we're peaking right here. There's your gap. There's 27 handles. We're coming to the 2380 area of resistance to the upper end of this market. And we're at 1294, and they're trying. So what I'm seeing in 6 minutes of this tape is where some of the short sellers scrambled to get out, and that selling in this one because it's not much in the money. 1120 was a good exit. This one we took it up from 1650, trying to reach up 1560 on the high. We did have an exit at, I believe, 1540 or something like that. So we're going to let it try to break a series of highs from yesterday's sell down. And then, all right. Now, Kareen, you got your limit order out up at the upper end. Okay. Price volatility remains 633.80. It happened in 14 minutes of this opening bell. What are we looking for is that 631.50 print. We'll hold that 1440 by 1490 620 call that made that 1580 with a limit to sell at 1650 with a criteria though that we already own it from the previous day for upside volatility entry. We're out of this one here at 1120 for what it was willing to give. It overshot. What's it all about? Selling into strength. There's that movement on that 15-minute bar. And as long as you go above 631.50 in Google, the 620 call goes higher in your premium. I'm going to conclude the opening bell. I'm going to conclude that here the NASDAQ 100 has hit resistance areas. S&P is right up here at that 1192 area. We have 1195, 1197, and right below 1300 on this. We've talked about it day in and day out with live videos that this is the upper end of that resistance ranges that we're getting on the second trading day of the week on calendar day 110 of 2012. And that price volatility, triple digit futures gaps are here. And the same structured price volatility that was part of 2011, the passing calendar year, will be in play. And at certain times, price volatility will increase for the remainder of year 2012. The price volatility starts and qualifies with triple digit gaps in pre-market based on major headline events that are happening around the world. And then the discount model is also trying to get in this bull sentiment. But there's one thing in this tape on this 15 opening minute bell in the first qualifying day of increased price volatility will increase as it was in 2011, and it's here to stay. And it will continue to escalate in 2012, January 2012, all the way up until the June of 2012 forward-looking 6-month period is that this video will have a ring in your ears day after day up until that point, that this price volatility, whether it's a super volatility gap up for the bull or whether it's a super volatility gap down for the bears, is that bull totally convinced and going to buy into that exuberant discount model that happens on Wall Street outside of the earnings factor? And where we're going forward looking is discounting all of it and trying to get a bull case? Because you got to remember, none of them are getting 2012 December bonuses. They all got washed out of the market last year. They all got margin called. They all got everything that I'm talking about and everything that I said last year in the opening bell, just like we're in January. Look at exuberance has a price. And you got to have the reality so you're never caught in one side or the other. And I can tell you now. And another thing I'm going to tell you, that the triple digit volatility is here to stay. It is going to be clocked in the SMF system, and the date, calendar date, is 1/10/2012. And this is how it's begun to begin this calendar year up until the June point. And watch that 631.50, 1420 by 1480. That's that here. All right? And this is that upper end of resistance areas that we're going to be looking at for the rest of today and tomorrow. And once again, we've had a slew of earnings that were not good overseas. This whole gap is to sell. And here we are. And we're 1410, 1460. When we get close to that number, that's when you start working down into the 13s in the bid and ask here. You must maintain above 631.50 to maintain 1420. So what do I do in a case like that if I think it might break? I could throw an order out there at 1420. I can contract it. Then it's not 60 cents wide. I am in control. I'm still above it, but I need to know, well, what would I do if I had to limit out? I would have to contract the bid and the ask if that was the case. We haven't broke below it. We're close to it. But how do you contract to get it? You go at 20 cents. There. We're broke below it, and we are below it, and it has to maintain it. And you can see 14 by 1440. You can see what 631.50 really means.